There are few companies more connected with Cincinnati than Procter & Gamble. Tomorrow, we'll learn how the company did during the past 3 months and for its entire fiscal year. P&G makes so many brands that we use every single day, but its competitors have seen very little growth during the past year. That's raising concern about Procter's own numbers. Joining us with a closer look at what to expect is WCPO business reporter Dan Monk. I want to thank you for being here. And when Procter releases its numbers, what are you going to be listening and looking for?
I think I'll be looking for what they have to say about next year, because in recent weeks you've seen a lot of analysts downgrade the stock, and there seems to be a shrinking expectation for growth. Think back a year ago when it was in the middle of this proxy fight. Nelson Peltz was fighting for a seat on the board. He's their biggest critic. They were telling investors that their cost cutting was going to be translated into future growth. They were expecting 2 to 2.5% revenue growth this year, and it looks like the number tomorrow is probably going to be below 2%. So are they going to again promise 2 to 2.5%, maybe 3% growth in the coming year? And what are they going to say about how they're competing? Are they losing market share still to smaller brands?
Your answer to that question has engendered a couple of more questions on my part. First of all, when we talk about slashing costs, raw material prices have been going up. So how does that work for P&G? Well,
it's a problem for them. I mean, in the first quarter results, they listed 8, what they call them are headwinds, 8 problems that they're now facing, including foreign currency fluctuations, rising raw materials costs. Their big problem is that costs are rising quickly now, and they're not in a strong enough competitive position where they can just pass those costs on to consumers. There are too many options. A lot of private label products. Go to any Kroger store, you'll see P&G Pampers next to Kroger private label. Same deal at Walmart. You know, these are their friends, these retailers, and they're still competing against them. So consumers have way too many options for P&G to just expect those consumers to pay more.
Okay, you mentioned Nelson Peltz. How is he perhaps expected to impact what we hear tomorrow?
Yeah, well, I think he's already had an impact in terms of P&G entering new product categories. Off air we were talking about natural products. Tide has a chemically pure product.
Environmentally more friendly.
Right, and more fewer chemicals that are harmful to the body. And that's a growing category that P&G entered after all of this agitation began. Also in the first quarter, they announced a $4.2 billion acquisition of Merck's consumer health business, which puts them deeper into the vitamin category. So P&G is taking steps to look for areas of new growth, and their cost cutting is generating money that they can invest in new product innovation. So I think they're making a lot of moves. They are being responsive to investors. The question is whether they can make that pay off with faster growth in the next 12 months.
How it all shakes down. Dan Monk, thank you for your expertise in this area. Always appreciate it.